Hi, Tim Biggam back again for Delta Derivatives, option hedges and edges, taking a look at a market that is starting to look like it's running out a little bit of the momentum that's propelled it right up near the all-time highs here. Yesterday's sort of price action, the huge exuberance on that USMCA or whatever they're terming it now, kind of the NAFTA reaccord, let's call it, was some selling into the close, seeing the market a little weak again today. More importantly, I think seeing stocks react negatively to pretty decent earnings. We saw Pepsi come out this morning, beat handily, but yet that stock is down sharply. Why I think valuation, certainly. We are looking at the highest price to sales basically ever on the S&P 500. Stocks on a PE basis also looking rich as well, 25 times current, 18 even times forward if they go ahead and meet those earnings. We're also seeing companies guide lower here for the fourth quarter, so we'll see what happens as we are poised just below those all-time highs here. One stock I think that also got ahead of itself, Boeing, which saw a huge rip higher on that USMCA passage with steel stocks getting hit hard. That's a benefit for Boeing. Second biggest cost is steel and aluminum besides labor for Boeing, so we saw that stock lift off. Also probably a little hint that maybe the Chinese tariffs won't be nearly as much as anticipated. Another benefit to Boeing. We're seeing that unwind a little bit today, so having that curl back on a stock that's valued at the richest in 5 years, overbought on every metric. I'm selling out of the money call spreads. Traditional October 400-405 call spread, collecting about 80 cents, so I like that kind of risk return. It's about 10 points out of the money last time I looked. An unusual option activity. We're looking at a cannabis name that really wasn't a cannabis name until a couple of days ago. Neptune Wellness, which somewhat reinvented itself. We saw huge call buying yesterday in the November $4 calls, over 4,000 contracts traded. More importantly, IV jumped from about 130 to almost 170, so I jumped in, sold those comparatively expensive no 4 calls, hedged with the November 5 puts, doing what's called a guts trade. Fairly delta neutral stock right around that 450 level, just looking for IV, which expanded out big time to contract back and take that trade off. So we'll see what happens. We have Fed speakers now on the docket this week. Jay Powell certainly will be the most widely followed with that 10-year well above 3%. Some of those old tailwinds for the market seem to be ebbing. So until next time, as always, here's to good trading. Take care.